Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today I'm going to talk about how much you should put aside for your tax throughout the tax year. Before I do that, if you're new here, please do take a moment to subscribe to our YouTube channel. That way you can easily refer back to this information if you need to, as well as being able to access other information that we have on a whole host of different topics, all aimed at supporting you in your self-employment. If you navigate to the playlist section of our channel, you will find the topics loosely catalogued, and you should look for the circumstances that closely match yours, and in that playlist, you should find the topics that are most useful for you. You can also find the core topics with some fundamental basic information that's relevant to anybody in self-employment in our core topics sections. So back then to how much to put aside for tax. So of course, being self-employed also means that you don't have anybody on a regular basis deducting your taxes and your national insurance, potentially your pension, student loans, and just giving you what's left as you would if you were employed. Not only that, but the tax return spans a whole tax year, and the tax due on that is quite a time after the end of the tax year. So it's a real different culture change in terms of planning that liability, making sure that you set aside the liability from the income that has incurred it. Because if you imagine, if you for example worked as a sole trader for one full tax year and earned a good level of income, perhaps incurring quite a high tax liability, and you hadn't set the money aside for that, and then let's say something happened in the next tax year and for some reason you didn't have that income anymore, but you're still going to have to pay the tax. So if you hadn't put the money aside from that income, then that's going to become problematic for you. So it's always good a good idea to set the money aside for the tax. And lots of people say that, you know, it's complicated to manually calculate tax and to think about everything. So quite often people ask, is there a set amount, a set percentage, or a sort of a fixed amount that they should work on? And the answer is that there will be some way of working out for you what the best way, but there's not a sort of a fixed 1% sort of suits everybody. And this of course is because that everybody's tax is going to be different. Everyone's individual circumstances are going to be different. Everyone's level of income is going to be different. So the important thing is to understand your individual circumstances and work out the method that best suits you. So if you are using Making Tax Digital, for example, software to complete your bookkeeping and keep your records through the year, then that will help you to keep a good track of your profit levels through the year. And some of the software providers will have an inbuilt prediction of the tax, although that is only an estimate and it won't take into account other factors. So if you're doing something like that and you're able to be able to keep a track of your profit through the year, then that will help you to be able to, from time to time, just check that you are putting away the right amount. Because of course, if the system that you've worked out for yourself isn't putting sufficient tax away, then it's better to not only find that out when the tax becomes due, or even at the end of the the tax year, because of course the sooner you know you're not putting enough aside, then the sooner you can adjust and the less sort of catch up there will be. So if you are a CIS subcontractor, then you will be quite familiar with this concept, because the standard CIS deduction rate is 20% on all labour costs. And that is because HMRC have calculated that on average earnings, that will be sufficient to cover liability. But of course, if you earn higher than average, then it won't be. If you earn lower than average, then it will be too much. And in that case, you will have a rebate. But for everybody else, it may be a sort of a new concept and something that takes a little while for it to sort of fit in your mind how it's going to work. The other thing to consider when you're deciding how much to put aside for your tax, national insurance liabilities, is to consider your own individual attitude towards towards that liability and putting the money aside. So what I mean by that is it's important to understand what's going to impact you. So sometimes some people may sort of think, well, if I'd rather put more money aside, because if I get to the end of the tax year and I've put too much money aside, then I would just consider that as some savings, and that'd be a nice little sort of savings for me at the end of the year that will then be available for me. So another person may find that difficult, because if they know that they're potentially putting too much money aside, then they may have the temptation to dip into the money, and then they may find that they over dip into the money because they think, oh, well, there might be a little bit extra, so I could just take some out of there. And then they may find that they, at the end of the tax year, they haven't put enough aside. So it's important to, as with everything, to understand, you as an individual and your own attitudes and what's going to work for you as an individual, because there's no point in setting yourself up for failure. So if you are the sort of person that may dip into the money because you sort of think, well, there might be a little bit too much, then obviously it's more important to make the what you're putting aside more accurate. If you have the opinion that actually I'll just consider that savings and I know that I won't dip into it until I know what my liability is, then you can afford to sort of work more on a percentage that's high enough to make sure that you do set aside enough money. So if that makes sense, this is something that I do always feel strongly about, that some things, there's not a right or a wrong answer, but there'll be a right or a wrong answer for you as an individual. And it's about understanding what makes you tick and what sort of attitudes that you will have in certain scenarios to be able to work out what is going to work best for you. So let's move on then to how you work out how much you should be setting aside. So if you, for example, are using software and you always keep that up to date, and at the end of the month you have a look and you review your profit and loss, and you know that that is fairly accurate, then if you wanted to, from there you could actually work out exactly on that month's profit how much tax, national insurance, potentially student loan liability you may have incurred. And you would simply do that by dividing the thresholds by 12, taking off obviously the your personal allowance element for the month, and then sort of accordingly working out the exact liability. Now, some people may not they may not be able to do that. They may find it manual calculations too complex. And of course, there's no point in setting yourself a task that is actually incredibly difficult and complex for you, and it's going to take you a long time on a basis to do. So therefore, you may think, well, that's a no-go for me. I don't want to be sort of working out every month exactly how much liability. I want to just, much like the CIS for subcontractors works, I want to just put aside a percentage of my total income. I don't want to be worrying about how much of it is tax-free, how much of it is 20%, how much of it is at 40%. So if you want to do that, then what you need to do is you need to have a starting point of knowing roughly what you expect your profit to be for the year. And again, it's obvious when you think about it, but it's important to remember that if you overstate your profit, you're going to be putting more than enough aside. If you understate your profit, then you're potentially not going to be putting enough aside. So it would be important throughout the year just to be aware of how what basis you've used to calculate how much to put aside, and to just adjust that if you needed to. So obviously there's lots of factors that are going to affect how much tax you need to put aside. So firstly, is this your only source of income, meaning that your personal allowance is available against all of your profit? Or do you have other sources of income that may utilize that personal allowance? Are those other sources of income taxed at source and potentially not using your personal allowance? So that's important to understand firstly, because that will have a big impact on the tax that you decide to put aside. Are you likely to go into high rate tax and be paying tax at 40% or even higher if your income is higher? Are you likely to have profit over 100,000, which would impact your personal allowance, by you would start to lose that? So do you have a student loan to pay? If so, which plan are you on, and how much, when does that start, and how much, what percentage of your profit would you have to pay towards that? So these are the things that you need to understand from a starting point, and then you can start to work out, well, what percentage shall I put aside? So sometimes people say, well, I'm going to work on this on the basis that but perhaps if somebody used to be a subcontractor, so they're used to the concept of a certain amount being actually deducted from them and paid over to HMRC, they may say, well, I don't actually do any of that work anymore, but I just want to work on the basis of paying the 20%. Will that be enough for me? So the thing to remember is if you're doing that on everything, then there's going to be kind of like a sort of like a threshold where that no longer becomes enough. So let's break the thresholds down to round sort of thousands. And let's say that let's work on the basis that the first 10,000 is no tax, you've got no other income and nothing else to be using your personal allowance. You get standard personal allowance, and then let's work on the basis that you had total income of 20,000. So we've rounded the thresholds down, which obviously is going to slightly put more aside for the liability by a couple of £100, because we're taking off a couple of thousand of the personal allowance. But so the £20,000, if we take off the 10,000 that there's no liability due on, then the next 10,000 we're going to be paying 20% tax and 9% national insurance. So we're going to be paying 29%. So if we have decided to put 20% aside, then there's going to be for a period of time where the fact that we don't have to pay anything on the first 10,000 is going to offset the fact that we're only putting 20% aside. So if we had put 20% aside on the full 20,000, we would have put 4,000 away to cover our liability. But based on on a 20% tax and a 9% national insurance, we would need 2,900. So you can see in that scenario, we would have put more away. If we then upped that to an income of 30,000, and again, we're saying, okay, nothing on the first, no liability on the first 10,000, on the next 20,000, we're going to have 29%. So that would be a total liability of 5,800. And so if we'd have put 20% away on the whole through at 30,000, we would have £6,000. So we roughly would have enough money, but you can see that the surplus is getting less. So of course we would get to the point where that wouldn't be 20% wouldn't be sufficient. So but if your income was 30,000, then it would be sufficient. If you then have a student loan, once you get into sort of that level of profit, you're going to need to start thinking about making allowances for that. So you can see why it's important to have an understanding and some sort of estimate of what you think your total income is. Just work out roughly what, based on your estimated income, is, and there's lots of reliable and accurate sites, including on gov.uk, where you can put an annual income in, and it will give you a tax and national insurance liability. Just make sure that it's designed for a sole trader, and so therefore it's using the right type of national insurance, because the rates are different. But ultimately, you just want to have an idea of what your tax, national insurance, and potential student loan, potential high income child benefit charges might be, and then work out what that amount is, what that total liability is as a percentage of the total income, and that will give you a rough percentage. But as I say, if you are working on this basis, it's important that you do assess that throughout the year to make sure that the basis that you've used to calculate it is correct. And as I say, it is, to my mind, it is important to put the money aside from the income that's incurred it, because if you spend all of that income and you spend the tax and liability income that's incurred, then you're going to have to find that out of new income. And I always say that what you should do is you should think about, when you stop doing what you're doing, whether that might be because you retire, or you go to a different type of different source of income. Perhaps you stop being a sole trader and go to a PAYE job, or if you retire for any of those reasons, you don't then want to be having to still be paying the tax and liability that was incurred from the previous income. So it's important that you do put money aside for it. It's important that you understand that if you are going to not wanting to go to the hassle of calculating that on a regular basis, which is completely understandable that you wouldn't want to do that, and you are going to be putting a percentage aside, that you've got some basis to have worked out what that percentage is, and that's going to be sufficient. Also, that there's an element of understanding your your individual thoughts and whether you're doing the right thing that's going to work for you. If you are particularly bad at putting money aside, and you think, even if I know that that's the exact right amount for the tax and national insurance, and if it's in a savings account that I've got access to, I will spend it, then you can pay it over to HMRC. You can put it on your self-assessment account. You don't have to wait till you've submitted your tax return. If it turns out when you do your tax return that you've put too much aside, then once your tax return is submitted, you can request a rebate, a refund of any overpaid tax. So some people feel that that's the option for them to actually pay some at least of their liability over as they go along, so that it's with HMRC. And again, there's nothing wrong with that. To my mind, it's about understanding your, your individual characteristics and actually setting yourself up to succeed by understanding them and adapting your systems to them. So hopefully that helps you to understand that, yes, you can work on a sort of like a flat percentage of your income, but it's important that you understand how you're calculating that. So you just would need a little bit of time at the start to work out what's going to be best for you. So thank you very much for watching. If you haven't already, please do subscribe to the channel. If you find the information helpful, please do take a moment to like the video. That helps us to understand what topics people find most helpful. Thank you. Goodbye.